Hello guys, welcome back to the channel. So let me show you one of the trades that we are looking to take today that looks like this. So this is a trade that played some 2 to 3 days ago. So I wanted to show you an example of such. So when I see two candles of 5 minutes coming to my zone, this should be the stop loss somewhere here, or you can have it down here depending on your risk appetite, and then you take at least a 1 to 4. At least a 1 to 4 is what this checklist is proposing, but sometimes I like going to 1 to 6. So some maximum I like to go to 1 to 6, sometimes 1 to 7, or if I want to get exactly 1 to 6 of my trade, I will go for 1 to 7 so that I account for things to do with spread and other charges, because as you know, if you want 1 to 3, definitely you're never going to get 1 to 3 sharp. So that means that you may end up getting low profits in return because of things to do with spread and so on and so forth. So this is a trade. I'm going to show you an example of how we are progressing with the one I'm telling you. So this should be the trade, and then we see it move like that nearly to stop loss, and then it moves like that. It took some days before it can materialize to 1 to 6 that was needed. If you wanted 1 to 6, probably it took a lot of time to reach there. I'm not even sure if it reached 1 to 6. Let's see, but at this particular point you should be trailing your stop loss so that you don't just miss out. So that means it didn't go to 1 to 6 if you had that tight stop loss. But as I've said, the strategy recommends that you take at least a 1 to 4 RR. So that means that you could have been stopped when this candle was coming here down here. I want to show you also how you could have still refined more and take more profit on the table. So I'll show you that too. So this is the checklist we use, very simple checklist. And then the trade I'm talking about is this USD JPY. We are still waiting for it to tap on this zone, and then we shift to 5 minutes, and then after 5 minutes we wait for it to close twice in our direction to show that the momentum is already kicking in, and then we buy. You can join the group, is free. I don't charge anything here, so just join the group, and then you can always talk to me. Like you can see, this is a trade shared by one of us here. We just discuss, and then I help these people fine-tune this strategy. Since I'm the author, so I like to fine-tune it for people to understand properly. So let me go through how this trade comes to be, so that you can also understand. If you were taking 1 to 4, let's see, 1 to 4 was somewhere here. That was nice. 1 to 4. The following day, actually at night, 1 to 4 had already played. That is always my sweet spot, 1 to 4, so that I can account for spread. So sometimes on average I go for 1 to 5, but sometimes if the market, like today, if I get a trade, I'll just go for 1 to 4 because of how late it is. At the same time, the momentum is a little bit bearish, so I would just go 1 to 4. Now if you went for a bigger stop loss, it is just nearly effective to take at least a maximum of 1 to 4. If you went for a bigger stop loss, I don't know if it played out. It didn't play out. It went for 1 to 3, so before it came back and out on break even. Now break even we go when high is taken. Like in this case, if this high went, this trade would have been a break even trade, because it would have slashed here, come back to break even, and then we call it a day. Or you can look for re-entry somewhere here, and then you edge again. So let me break down using the checklist so that you understand how this position came to be using this very simple checklist. How we trade. So we start with the daily time frame. We start with the daily time frame to know the overall direction. We don't mark so many things. There's no time for marking so many things in the market. So this was the day, so let me remove that one too. So you can see the market is trending because at least 2 candles have closed in one direction, showing that the trend has started. So we take trades when at least 3 of the candles have so previous day, as you can see in the first checklist, previous day closed in relation to the overall trend, market trend. A trend starts when you see 2 candles close in one direction. You can see here this was a trend 1, 2. It can be a trend for pullback, it can be a trend for continuation. Like for example, this was a trend for pullback, and as you can see, this was a trend for pullback again, and then we continue with the same trade here. This was a trading day somewhere here. So same here, 1, 2, 3, confirming that now we can trade on the 3rd day, on the 4th day rather, because there's some rule here that my people know in the group that we take trades when the last 4 candles are within the same range, are within the same trading direction, so that you are sure of the momentum. If you don't understand that part, you can join the group and ask me directly. I'll respond to you. If you are serious too, one of these days we can organize a Zoom meeting for anywhere you don't understand. So since the day is bullish, the following day we just need to look for bullish. So the following day is on 14th, so we look for bullish. So what do? We go to 4 hours and continue with the direction of the trade. This is the checklist. It's free, you can just use it. There's nothing, there's no some secret sauce there. This is just an SMC strategy that has been curated. So the first day of the first 4 hours of the day, what happens? You can see it takes the high of the previous day, of previous 4 hours. Sorry, the previous 4 hours high has been taken. It means that since we are bullish, that is what is called alignment. Previous days first 4 hour alignment confirmed. So I've just confirmed that the market has aligned bullish. So I'll just wait to London session because I can't trade at this particular time. So this alignment can happen anytime. The first candle, second candle, even in the 4 hours candle, or even in New York session. It depends. So I'll wait for New York to open. Now at what point does sorry, not New York, London opens at 9 a.m. candle my time. So I go to 1 hour and be monitoring the trades there in 1 hour, because after this alignment I need to mark discretions where possible, so that the market can possibly reverse to areas that the market can reverse to. First one is this. First one is this point, and then another point that the market can react to that is unmitigated is this point. So those ones are the areas I'm expecting the market to react to, but it's not a must, provided it reacts to fair value gap. Like if it takes this low, that is enough reaction. So immediately the market takes this low and it forms 1 hour, you can look for entry. So let's see. So we wait for London to open. Now what happens? This is 1 hour to London opening. So let's see, London opens, and as you can see, it starts by pulling back. So when I start seeing this happening, I go to the next checklist, because London has opened and we're already into 1 hour. The reason why we didn't even bother to go for entry is because the previous 1 hour is bearish. So we cannot buy when the market is bearish on the 1 hour. That one will be opposing the pullback. So we wait for 2 candles, 2 1 hour candles to close in your direction. Then the 2 must leave you fair value gap in 15 minutes and or 5 minutes. If not, then their highs or low should be liquidated first before you look for entry. So I'm waiting for another 1 hour to form, and then you can see 1 hour forms successfully. Now what do? I shift to 15 minutes and try and look for fair value gap. Now mark you, I'm aware that the market can still pull down here, so that is something that I'm aware of. So I go to 15 minutes and try and find fair value gap within this formation, this 2 hours candle. I check for fair value gap, and as you can see, if I start down here, this one is mitigated. Now this is this one is the only thing that doesn't look mitigated. So I'll check well in on 5 minutes. So this one up to this particular point of, obviously I can't check above or very close to the end, because that one I'll now be disobeying a very important rule of buy low, sell high. So if this was the fib level, if this was fib level, I would try and look for entries. I don't know why my Gantt chart is misbehaving. Oh, I need to place 3. So definitely it would be nice to be looking for trade down here, not up here. So even if this was the only unmitigated zone, I would strictly try and wait for the price to come down here. That is always the trick, or just let it go. So since there's no clear fair value gap on this one is very small, and as you can see, this one is already mitigated. This fair value gap here is already mitigated, so the only one that doesn't look mitigated is this zone. So you can wait for a reaction there. You can wait for a reaction there, or just relax and see what happens. So we shift back to, let's shift back to 5 minutes, 15 minutes, and wait to see if we are going to get trade. So let's see, market start to pulls backward, still moving up. So now there's something that happens if market takes a long time to reach this side, and let's say 2 hours, my preference is 2 hours, then I'll have to wait for 1 hour to form again in my direction, because it is taking so much time, and therefore 15 minutes will be useless in the presence of 1 hours that have been forming here. So I wouldn't just wait to take entry immediately the market taps there. If it takes a lot of time to reach that level, as you can see, this was a reaction that it gave on this particular fair value gap that was up here, this small fair value gap that I wasn't interested much in. So it is reacting to this 5 minutes. Let's see if it will, even if I wanted to take entry, I wouldn't take on this small candle. I will try and wait for a big candle, or I'll go to 5 minutes and take entry. I would go to 5 minutes and take entry. So this would be my preferred entry. Stop loss below here. Then when I see preferably this, or there's already a small pullback here and then a continuation, so that would be the ideal entry. But as you can see, this one, it moved a little bit and then stopped out immediately, because this because of the 1 hour thing that I was explaining, that you try to wait for 1 hour. As you can see, this fair value is down here, but how many hours have reached there? 1, 2. Beyond the third 1 hour, I must always wait for another 1 hour to form, like in this case. All these you cannot understand them within a single day, so you'll have to try and rewatch the video or ask the question on the comment section. So you check after this 1 hour has formed, you check if this 1 hour that was formed somewhere here will give you a fair value gap that the market will react from. Because do not just take trades when market reacts to your fair value gap and then you take trades. That means you will be taking suicidal trade, and that is not healthy. So you go to 5 minutes again and check. Now as you can see, this is the 1 hour, and this was where the 1 hour entry formed. You can see that clearly there was no proper fair value gap here that the market left, maybe except this tiny one, but we have now a dodgy candle here, so this is not even perfectly a good fair value gap. At the same time, when this market taps fair value gap, we should shift to 15 minutes. As you can see, there was no particular good entry, and that is why that entry that I marked somewhere here was very useless, because this trade took a lot of time to reach to this particular point. That means that it was now rendered useless. The momentum was heavy on the sell than on the buy. That is something you have to keep in mind all the time. So now you need to just be patient a little bit and just wait for these entire lows to be taken out, and then you wait for another 1 hour shift, because there is no fair value gap. And therefore you don't need to be taking trades, and as you can see, all of them are liquidated. If 2 or 1 hour does not have fair value gap, just expect them to be liquidated. Same to this. These are 2. Let's see if they had fair value gap. They had to be liquidated, and if they are not liquidated, so this was having a good fair value gap, which is okay. But now let's check 15 minutes. If it gave reaction, you can see 15 minutes gave no reaction. Immediately it came, it stepped here. If this was supposed to be working, we were supposed to see this kind of thing happening here, and then we go long, we go to the 5 minutes and get our entry and continue. At this particular point, after everything has been liquidated, I want you to take note that you can still get risk entry. How can you get risk entry? Only if 1 hour closes within, not outside. If this 1 hour closes outside, then most probably it will come up to this particular order block. But if it pulls inside and 15 minutes forms bullish like this, you are permitted to take entries immediately. But like I said, personally, I always prefer to wait for market to for previous 1 hour to be a little bit bearish, to be a little bit in my direction. In this case, you can take this trade like this, wait for pullback, and then take it like that. Alternatively, you wait for 1 hour, which is always my preference. So we've already formed 1 hour. This 1 hour is selling, so I would rather wait for 1 hour to form in my direction, like in this case. Now after 1 hour has formed in my direction, I check this 1 hour. If it has left fair value gap, then I know now I'll have a sweet spot for reaction. So let's see. So there is a very nice point here. There's a very nice point here for reaction. So when market taps here, I go to 15 minutes and look for entries. So let's see. We go to 5 minutes, 15 minutes. Let's see. You can see market does not waste a lot of time. Immediately it comes, taps here, and then like I said, you could have already taken your entry somewhere here. Alternatively, you could wait for fair value gap, but I prefer that you strongly wait for 1 hour to be in your direction, so that you can always sell. Even if you wanted to go here 1 minute to look for change of character and so on and so forth, it would be nice to look from this particular point. So the best thing here to do is to wait for market to start going in your direction. As you can see, this is already a market that has already started going in your direction. If you're tired of over refining, you can now look for entry at the pullback. Alternatively, I'll be comfortable looking for I'm giving so many options, so just choose whichever you want, so that you don't get confused that I'm giving so many options. I'm just being considerate because not everyone trades the same way, and then my understanding of the market is extremely high, a little bit high, so not extremely, a little bit high. So you can see the market starts by going down. I would expect 2 in my direction, like here. I would expect here, but since the market has already moved heavily, I would try and wait for it to come back again. I'm just following fair value gap, nothing more. I'm just following fair value gap. So if it goes this more, I'll wait for it to come back. So let's see. You can see it has already taken a lot of time to come back, so you could wait. Then immediately it comes there, you can wait for 2 candles to form in your direction. There we go. Oh no, that is one. Let's wait, another one doesn't form, so that means that the region is liquidated, and that is why the stop loss for this entry here was down here. This entry is invalidated because we needed 2 candles like this, 1, 2, to form in our direction. Let's see, and we get the second one. So immediately we get the second one. Now this one, you can have the tightest stop loss you want. Can have it there for 7 pip stop loss, and then you target a 1 to 4 because you've a 1 to 6 because you've really over refined, and therefore the market may slightly favor you compared to somebody who just took entry somewhere here. So let's see if it pulls back. Immediately it pulls back and it starts to move. You should be on break even right now, and as you can see, it moved very well. So whenever you have whenever you have imbalances, just expect the market to come and fill them at some particular point. So, and then entries, if you want to take sniper entries, wait for at least 2 candles of 5 minutes to close in a direction, and then enter on the retest and take the trade. It will always play better. Same too, even if you wanted to take entry immediately, this candle, this 15 minutes candle was closed, you would have waited for this candle to retest these zones and then give you 2 5 minutes. Like you can see, this one was one, this one was second one, but now it left fair value gap. Don't chase it here, just wait for it. It will come back, and when it comes back, it will give you again. You can see 1 2, you enter here, somewhere here, stop loss below here, or you can have it here. But as you can see, if you are liquidated here, you could still enter again here and take the trade. So even if somebody over refined up to this particular level, you see, before even the end of the night, you already into more than 1 to 10, because the trade even went massively. I think it went beyond this particular point. When we started showing this video, I showed that it went beyond this particular point. But this is now flexing, which is unnecessary. To get more than this is now flexing, which is unnecessary. You don't need to be flexing, you just need to make money. 1 to 3 is very good. As you can see, this is already clicking 1 to 12. Now this one I'm accommodating some, because we have some people who are snipers in the scalpers, who are in the group. I can still refine it for you like this. So always go break even when immediate high is taken. When this high went, you should be break even. Now when this high was supposed to be going, should have been break even. You could have maybe refined here, check if it went beyond this particular point, would have gone break even. Or if your stop loss was protected, you could have still just remain without going break even. So that is the trade. I'll shoot another one.